Welcome to Pique Your Interest, your go-to podcast for all things mortgage and real estate. Hosted by Tanner Greenwald and Tim Malaskis. We bring you expert insights to help you buy, sell, and invest with confidence. Let's dive in.
Welcome back to Pique Your Interest podcast. My name is Tanner Greenwald with the Greenwald team of First Home Mortgage, and I have a couple of special guests on today with me. Ladies, do you want to introduce yourselves?
I'm Alexis. I work with the Jack Hutchison Insurance Agency.
Hi, my name's Paige. I work for Jack Hutchison as well. Been in the industry for a while, worked for several other companies in the past, but...
You're with Jack?
We're here.
How long have you both been in the industry, the insurance industry, for?
So I've been in it for 5 years,
Okay.
and I've been only with the Jack Hutchison Agency. They
Gotcha.
found me when I was working at my other job.
Perfect. Nice. Paige?
I've been with Jack for 5, almost 6 years, but I've probably been in the business for like 13.
Gotcha. So we've got some experience on both ends from both ladies. I brought them both in today because I wanted to talk about insurance rates and why they are what they are, what drives them, that kind of thing. So I have a couple questions for both ladies, and if you want to tackle them as I ask them, that would be perfect.
Great.
So our first question we have is, can you explain the main factors that contribute to high insurance rates in relation to purchasing a home?
So I'll start off. I think that the main thing is claims. Like, not just yours, but, everyone filing claims. I know it plays on to like kind of our next segment of just like, your insurance is really for those catastrophic losses, and they have to account for the projected claims that they're going to have in the future. Coverage, the certain limits of coverage that you have, the cost to repair in general with just labor, lumber. But yeah, previous claims, even if it's not even on this property, any claim that you've had in the past on a previous home that you've owned.
All that, of course, is accurate. Sometimes too, people don't know like where the rate even comes from at all. So
Yeah.
Some things are in your control, some things aren't. So your house itself will be, how big is it? Square footage, do you have marble countertops? Do you have linoleum? So we take into account like all of the factors of your house and not necessarily what you would sell it for, because property values can go up and down, and we're not covering like the land value that your house is on, just strictly for reconstruct your house back to where it is. So that is one of the main features, and there's construction calculators that everyone uses to decide that. So that's one of the factors. The other factor for ratings, kind of like you yourself, your age, have you owned a home before? Are you married? How long have you had insurance history, credit history, things like that. So that is another portion that goes into it. I mean, we hear a lot of people that are like, my neighbor pays this. And
Right.
you're like, well, you can't really go off that.
Yeah.
Your neighbor might have, 10 policies together, or
Right.
there's so many factors that goes into it. So it can definitely be frustrating for people to even know where that's coming from.
Right.
Yeah.
Which is why you need an agency to explain that to you.
Yes, I agree. And it's funny you say that because like we have the same thing where it's like, well, my neighbor, they bought a house for this amount. And we're like, all right, well, you're not your neighbor. Unfortunately,
So many things that go into it.
Yeah. Okay, cool. So second question, how do natural disasters and climate change impact the insurance rates?
Significantly.
I would say, everybody, rates have always been going up and down for various reasons, but definitely at least in the past 5 years, the amount of severe weather and more natural disasters is really the main driving rate of why the rates have continued to go up, especially, since the pandemic and things like that. But, the companies are paying out like billions and billions of dollars.
Yeah,
Everyone has in their mind, a big brother kind of thing, like, oh, they're just increasing the rate. Like, there's really severe, situations that are happening more frequently. So that's the main driver of what really increases people's rate right now.
I was going to play into what she said. We talked about this fun fact before we came up here, actually. There was $23 billion losses in 2023.
What?
Individually.
Wait, say that again. So
$23 billion losses. Like there was 1 billion, like
one claim, one storm
created
cost
$1
that
billion
much.
worth.
oh my Lord.
Yeah.
And
Wow.
that's not the only claims that are being filed. I mean, everyone
Right.
can see
That's just the catastrophic losses that is.
Right.
there's smoke in the air, like when all that was happening in Canada. And I mean, we live around, Annapolis, Baltimore. There's definitely a lot more flooding than there used to be.
Right.
I don't remember which one, but our boss, Jack Hutchison, has a picture of one of the floods from Annapolis. I think maybe like 2004.
Right.
But if you look at it now, you're like, that happens all the time now. So what used to be,
a once in a blue moon is happening a lot more often.
Yeah. So
Well, that was
a lot.
That was going to be my next question. Like, obviously, you've mentioned flooding, but like, what do you notice in Anne Arundel County that's been like the main contributor to that?
Definitely proximity to water. There's always a lot of water backup claims. Water definitely on the coast is one of the number ones, but also like wind. Just freak accidents. I mean, last August, it wasn't a tornado or anything crazy in Westminster. Just wind knocked down 30 telephone poles at the same time and smashed everyone's cars that were in it. And you're like, that wasn't even like a tornado. That was just like a bad wind came by. And you're like, okay. So those freak type of situations are becoming more common. So
Gotcha.
Getting a little crazy.
I feel like this may be important too, but homes are rated based off of your protection class. So how close you are to the water, how close you are to a fire hydrant, how close you are to a fire department. That also plays into a factor of your rate. The higher the protection class, the more the insurance company is at risk of something happening to your home. So that kind of plays into the first question of like a main factor.
Mm-hmm.
There's a lot more steps. Like I was just working with a client where he has a beautiful home, very well kept, but it's right next to a body of water. There's no fire hydrant anywhere near him. So I have to call the fire department to get the amount of tank capacity, the gallons that tank has.
That's so interesting to me.
Yes,
That's wild.
And it's not just like now it goes from like a basic home quote to now I have to send it off to somebody else to do it.
Yeah.
And then I have to wait to hear back from them. And then I have to fill out this form. And then I have to wait to hear back if the fire department will answer the phone too.
Right.
So it's just like there's a lot of things that can also go into with just like the rating on that factor. But
yeah, those are good points. Like that's not something I would ever have. Yeah, not at all. Not at all.
Before I got into this industry at all. So
wow. Yeah. So we kind of get a little bit of background about what you have to go through when it's that.
Yeah.
Okay. Yeah. Okay. So what role does an individual's credit score play in determining their insurance rates, or is that just a moot point?
So for homes, it doesn't come into as much of a factor as it does for your auto insurance rate.
Okay.
So this is like my main thing that I did want to bring up with this question. There's a big myth around like insurance companies affecting your credit score. But what we do is like a soft pull and not a hard pull on your credit. So it doesn't affect your credit score like people think it does. And she brought up this good point earlier that it's not really based on your credit score. So it's not going to pull through your 600 credit score.
Right.
It's going to pull through your insurance score overall.
Okay.
And like there was different ratings. If you're an F1, F5, like there's...
Wait, so can you break into that, insurance score? So we deal with credit score. It sounds like you all deal with insurance score.
So yeah, that definitely one of the main thing we wanted to let you know. So in Maryland, definitely, I don't know every single state, but they all have their own regulations. We're not allowed to use credit directly, like she's saying, 800, 600. We don't know your experience score or anything like that. The companies do have access to some level of your traditional credit score, but that's on more of like a corporate kind of level. So the things that your agent will see, or if you do a quote even yourself online, each company has their own like criteria for the insurance score. So they are looking at, your credit score, but also how long have you had insurance, your age, do you have prior insurance currently? How long have you had insurance with the same company before you?
Right.
How many claims that you filed? If you're married, sorry, I'm not married currently.
Yeah.
They do look at that. So there's a lot of factors that kind of go into that. And then, the insurance company gives you like an insurance score based on a lot of different data.
Right.
So they're kind of going off that. But yeah, that's one of the main things. A lot of your other policies, they are looking more particularly at your particular score. But insurance score is mainly kind of where we get the rate from for your premium.
Okay.
Yeah.
Yeah, as well.
Yeah.
Yeah.
I just try to do my own auto policy. Like I'm 25, so I need to have my own policy now. My car's in my name.
Big
I went to
girl.
go do right, growing up. But I went to go do my own policy, and like I have decent credit. I still live with my mother, so I have her home car discount, and I was fully declined. I was like,
Whoa.
sales manager, please look at this. But it's basically because I have one car. I'm not married. I'm 25. There's just so many different things that go into the factor of your insurance score.
Gotcha.
And a lot of times, sometimes you'll call into like underwriting and be like, what is this? Like, why is this? And they're like, well, it's basically proprietary information, and it's just based off of, what do they call it? It's not insurance score, but yeah. So there's definitely like where you're like, you would think I would be like a great growth client for that company, but it's just the way that things are, especially right now with inflation. That's been a major impact on the insurance world. There's been certain companies that have, had to put a hold on new business just to kind of slow things down so there's not an influx of claims. It's just the fact of the reality that when people, don't have as much money with inflation, they tend to file more claims. And it's just, it sucks to try to explain that to people at times. It's just a difficult world that we're in. So that's definitely a big factor in rates right now as well.
Gotcha.
Yeah, it can definitely be tough for younger people, especially if you don't have a lot of credit. I mean, it's like when you're younger and you're like getting declined for credit cards. You're like, well, how can I get credit if no one will give me credit in the first place? So it definitely takes a bit to kind of build that up. So even younger people with a great job, no negative on their record. It's just, they're just starting out. So you're still kind of like an unknown for the carrier. You may be the best client in the world, or, there's just more of an unknown. So they're going to give you a little bit higher of a price until they get, a little bit of a relationship with you.
I was going to say, it sounds like a relationship that they're trying to, form. You got to go on a couple dates to see if that's what you really, want. Okay, got it. All right.
Even like the younger generation, like sometimes if you don't even have any credit building, like she said, it'll just pull through as no hit. And then you just kind of got to have that rate of just, like she said, you may be responsible, you may be a great candidate, but like she said, like you got to feel it out. Like kind of like, you may be great, but you also may be not paying your bills.
You go on a date, maybe you look the guy up before. Yeah. You never know. Do a little bit of stalking. Do a little background.
Who does that?
Yeah.
I know like every resource website. So obviously nobody wants to pay a high insurance rate. So that leads to the next question. What steps can a homeowner take to decrease their insurance rate? Or are there,
there are some things that you do have in your control. Number one, we'd say have an agent that knows what they're talking about. They can advise you. There's a lot more things going on in the background that people don't necessarily know. So definitely that. Try to traditionally keep your policies at the same company.
Yes.
If you've been with, a certain carrier for 10 years with your auto and then your home's here and your boat's here, your biggest discount is usually keeping your home and auto and as many policies together as possible. So that's definitely one. Deductibles, that's how much you have to pay out of your pocket if you do have a claim.
The higher the deductible, the lower the premium. Yeah. It's always my spiel.
So, that's just the world we kind of live in. It's where people are going to need to do that. Don't file smaller claims. Like your policy is definitely there if you need it and you should be able to use it. But you shouldn't be filing a claim for $300 and then you're going to have a surcharge and you're just like...
For 5 years.
They look
into the past 5 years.
So clearly you should be using it for what you need it to, but it's not like your home warranty policy to repair everything in your house.
Gotcha. It's for like the catastrophic higher water losses, wind losses, So I was going to say the same thing, deductibles. I always go over the reconstruction estimator that she went over earlier. Yeah. So it's basically like I can take information from online. I go into property search, see what your home's kind of valued at. Again, we don't insure the land. We only insure the structure itself. So just making sure that your home isn't overinsured.
Right.
So I always go through and like rerun numbers, and sometimes I just did that with my mom's home. It was like 50,000 overinsured because there's an inflation guard that goes on the policy to make sure you're at least, you'd rather be overinsured than underinsured, clearly.
Yes.
So very important to say, but sometimes it's a little much. So
Right.
I just reconfigured some numbers, and it saved like $200 annually on her homeowner's insurance.
Wow.
Because it's like you're paying 50, 80,000 more on the structure than it should be. There's a lot of discounts that you can get, like your roof when that was last updated, your HVAC. Certain carriers care more about primarily the roof. If that's been updated recently, some carriers won't even accept you if you've had a roof over 15 years old. 10. Some carriers are getting a little really, really strict. Not a little, really strict about it.
I didn't know that.
But yeah, your
That's
HVAC. Certain companies care about plumbing, wiring. If it's an older home, they want to make sure that's maintained, because you do have a due diligence on the homeowner side to maintain your property.
Right.
So they do reward you on that factor. Monitored alarm systems. Now, I always like to say to our clients, like, this isn't going to pay for the alarm system,
Right.
but if it's something
You're
that
already
you
getting
want,
it,
right.
if you already planned on it, it does save you a bit of money. Some carriers will even give you like what we call like a local alarm discount for like having just like cameras on your property. So not that it reports to the police when something's happening or the fire department, but at least that it's being monitored and you are aware, like it's sending a notification to your phone.
A lot more technology options. I mean,
Yes.
a lot of people have, the Ring cameras or,
yeah.
whatever system. There's also other technology that people can take advantage of, like water sensors. There's other different, electrical surge sensors, things like that. The companies are getting a lot more up to date with the technology. Nothing happens quickly in our world, but
Right.
you can get a lot of extra discounts for those type of monitoring as well. Just making sure you're taking advantage of all the discount options that you do have.
Sprinkler systems, that also gives you a small discount as well. Home car, like you said, bundling, you get a discount for being married. A lot of people are a little weird sometimes where you're like, well, you want to add your wife or your husband. They're like, why?
Yeah.
Well, I swear.
Right. It's a discount to you.
I'm trying to help you. I don't care what your guys' situation
Right.
is. You can tell me.
We need to
you
know
can tell
this
me,
business
but
Yeah.
but that's definitely a factor. But yes.
Okay.
Yeah, so that's pretty much it. You do have control over some things. I mean, the market's crazy right now. Rates are crazy right now.
Mhm.
Everyone definitely should look into their policy itself and, see what other options are out there.
Mhm.
But for certain people, like if you're going to change your policy every single year because you're going to save $100 or, here and there, ultimately you're going to hurt yourself in the end, because companies obviously want to have a client, they want to keep them
Right.
as long as possible.
Yeah.
So if we see that you're moving every year and you could pay us 1 month and then your house burns down, nobody wants that. So
Right.
you are ultimately, in the scheme of things from the insurance side, if you're moving all the time, they're not going to give you the best rate. This isn't exactly home, but another thing too with like your liability limits and certain limits on your policy, if you have the bare minimum, then you're not going to be in the top tier. So
Yes.
they look for how high your liability limits are, what policies you have. So some of the like common sense thing you would think, and you're like, well, if I have less coverage, they're not going to pay out as much. So wouldn't they want that? That makes sense, like if you're just logically thinking of it, but companies are looking for people with higher limits and more policies and things like that. And you're going to get a cheaper rate if you have higher limits ultimately.
Yeah. I feel like you're like almost reading my mind, because I'm coming up with questions in my mind to ask you, and you're like answering them off the bat. So
Yeah.
Yeah,
So
okay.
a lot of common sense things isn't necessarily how it's gonna work. But I mean, your policy's gonna pay out. If your house catches on fire and you can't live there for 6 months, and then we'll rent you another house, we'll pay your extra expenses. I mean, everything's more costly. All the appliances, your clothes, furniture, everything costs more. So
Right.
when we have to replace that, like if this desk was, 3 years old, we're going to pay for you to get a new desk, even if it's $500 more than what you paid
As long
for
as you
it.
have that endorsement on your policy.
Yeah.
It doesn't just come with that.
Yeah, so sometimes you are getting paid more than what you actually paid for things, only on the homeowner side, not for your cars, people. But, you know, just the cost of everything's a lot higher, so, you know, it just kind of spirals into every aspect.
To go back to play on to like the liability limits, it's really insignificant sometimes to increase your limits, especially on the home. It's dirt cheap. You can go from $300,000 to $500,000 of coverage for your liability, and it's like $2.
A lot of times,
and it's really insignificant. Like sometimes when people tell me they have $100,000 on their home, I'm like, for what?
Yeah.
Like it literally costs nothing to increase that limit. Why would that person even offer that to you?
Right.
But some people don't know. Some people don't have an agent, or some people just went online and did the quote and just aren't aware. You think, oh, I have $500,000 worth of liability coverage on my home, that it's going to go up significantly. It really, truly doesn't. So somebody gets hurt on your property, you get sued, something you're responsible for. That's kind of what that plays on to.
Yeah. Other things too, just kind of like coverage wise for people. You know, people, especially on the car, people think like full coverage, that means everything in the world that could possibly be offered is going to be there. That's definitely not the case. And the homeowners doesn't have a lot of things included. You need to make sure that it's added. So like water backup, if you have a sump pump that overflows, really any kind of water that backs up into your house, that's not automatically
toilets
covered on the policy.
Yes.
So you have to have that. If you have, you know, engagement ring, special jewelry, certain things. If you don't have it itemized, you're not getting paid the full amount for that. Or if it just disappears, you know, on vacation, no one stole it, but I don't know where it is.
Right.
If you don't have it listed, you're not going to get coverage for it. So a lot of times when people are upset, it's either a premium, there's so much you can do about that, or they're having a claim and they're unsatisfied, and that may be because they just didn't know what the correct coverage was.
Yeah, there's certain limits that your policy has. Like if something gets stolen out of your home, they're not just going to be like, oh, here you go. Like there's certain limits for jewelry, guns,
cash.
Yeah. Fur coats or
firearms.
Right, whatever you have. Right. There's certain like crazy limits.
I get it, girl.
Yeah, but there's certain limits to your policy or whatever that, you know, people just aren't aware of. So it's definitely important to ask any question. I always say that to people when I anytime I write a new policy for somebody, I'm like, there's no dumb question when it comes to this because it's so complicated. Like, trust me, sometimes I turn to them like, listen, this may sound like a dumb question, but please bear with me. Like through my thought process of where I'm getting at, you know? And we've all been in the industry for a significant amount of time now, and I still learn something new every single day. There's always something new popping up. Yeah. So, like,
I'm learning something new now. Like, I'm like, wow, tell me more.
Exactly. So, you know, there's people that haven't been in the industry, or even, especially, like, I think my forte is, like, working with clients that are, like, more so my age and explaining it to them more in depth to set them up for success. Like she was saying, your liability limits, like, instead of having state minimum 30/60, increase it to 5,100. Like it'll pay off in the long run. Yeah. Right now you may be paying $100 more every 6 months or whatever it is, but longevity wise is what we're kind of setting you up for.
Yeah.
Another thing too with people, you know, if you do have an agent, I would definitely suggest, like, if you're thinking about putting in a claim or you have questions about your, you know, what's covered or not, I would say call your agent if you can, because if you just call the claims department and file a claim, maybe it's not covered, maybe it's under your deductible, whatever the reason is, that's still going to be on your record as a claim.
Right.
Yes.
So if somebody calls us and says, hey, you know, my sump pump overflowed and blah, 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 and then we're like, okay, well, you don't have water backup coverage, and we offered it to you several times, you didn't want it, that happens a lot, but, you know, we would suggest not obviously even calling in, because even if you're declined, if you want to move, say you're buying a new home, say you want to go to a different company, that's still going to be on your record.
So it doesn't affect your current company, but it will affect your next company when they look back. Even things like, you know, for auto towing, like I always kind of sell, get AAA. Don't use the roadside assistance on your insurance company because it will play into a factor. We've done quotes and we've pulled through their reports, and that's another thing, reports that get pulled through. We pull through your reports and it goes up $100 because of a towing loss. And you're like, that's absolutely ridiculous to me. You paid out $50 once and now it's $100 more every 6 months, or sometimes it's a ridiculous, increase. But a big thing, reports do not get pulled to the end. So if you get a quote online, even when you call into your agent, sometimes, they can't pull it until they go to issue the policy. So just definitely important to be as honest as you can with what you think is going to pull through on your record.
Because it's going to come through.
Yeah, we will find out. And when you call and talk to us, there's absolutely never any judgment, we're going to tell you the best route to go.
Exactly.
But yes, very important. We've had clients that have left us and we're like, are you sure you got the policy? And they're like, yes. They gave me this, and they've called back. We've had somebody a couple years ago, I will never forget, just called back 30 minutes later and was like, can I reinstate the policy? And we're like, no, you can't.
Yeah.
It doesn't work like that.
Yeah.
You canceled, you signed a form, we processed it, and they pulled through the reports, and it was $200 more a month than what ours was.
Yeah.
And it's now we have to go and put you with a lapse of coverage. That's definitely important to keep current coverage in your name at all times, even if you're just a driver on somebody's policy per se. If you can, obviously not everybody has that capability, but just that 1 day lapse. Well, you get fined by the MVA. Now it's $200 a car, plus $7 a day after the 30-day time frame. So you get charged $200 for having 1 day lapse of insurance up to 30 days. And then after that 30 days, it's $7 a day. So that's definitely a big factor where please, after, your rent, it probably should be insurance, your next important bill.
Yeah.
Because then you're going to just put yourself in a hole of just now paying out more fines or whatever the situation is, and then paying more in insurance when you have to go shop again. We even suggest to people oh, I sold my car, but I'm getting another one in a couple weeks. Go down to liability only, go to the bare minimum dirt coverage. Then once you get a car, we'll just add it to this policy just so you're not having a lapse in your name. And then it's going to double when you go to shop for insurance again. So it's definitely, things that people aren't aware of, which I wouldn't have been aware of either. Working with everybody on a day-to-day
Well, that's why it's important to have the relationship with the agent, because I'm going to be honest, I've in the past myself, even just kind of outside of calling in the office, I'm like, hey, this is a situation, guide me. What should I do? What should I not do? What should I not even say? Help me. Hook a sister up,
Right.
But it's important to have that relationship because it builds not only the trust, but you learn, you get the information that you need. That way you set yourself up for one of, the best policy you could possibly have.
There's also a myth that I do want to address that agents charge you more. That's not true. I mean,
hear it first here. Agents do not charge you.
There's certain companies that do have a direct rate with them, but it's very, very rare for that to happen. So I just think that's kind of important where it's sometimes they're are you charging me more? I'm like, no, but
we're also not used car salespeople. We can't just knock 20% off the top.
Right.
That's not a thing. The rates are
what they
under
are.
These factors, and that's where it comes from. So it's not I can be well, I could lower it 500, but I'm not that. We don't have the capability to do anything like that. And the only other thing I could think of to say, a lot of times if you're purchasing a new home, you're going to have the home inspection already. But people that, have existing homes and they're looking to move, or even if you're buying a new home, the companies are either going to send an inspector out to look at the property, or, they might want you to do kind of a virtual inspection.
Yes, that's becoming a lot more common.
So they're looking for things that we may have missed when we enter. We try to be as detailed as possible, but if you have an addition on the back that, we didn't know about, you have a large detached garage, you have a privacy fence, there's certain things that we might not be able to see, online.
Certain things don't get updated right away when, you do have that addition. If it is getting reported to the state, then, that property search that we use online doesn't get updated for months. Even when you buy a home and, it switches to the other person's name, it takes months for that to happen.
Right.
Yeah, they're going to look for potential, like, other hazards, too. You know, you have a dead tree that's going to smash into the house. You have a pool with no fence. There are certain dog breeds. We love all dogs.
Yes.
But there are certain ones that particular companies, you know, don't want to insure.
What are they? Out of curiosity.
A lot of them are pit bulls, Doberman pinchers, you know, wolf breeds. There's a whole list of them. And it just depends on what company you're with. Some companies say if your dog's never had any bad history or bite anyone or what have you, it's fine.
Yeah, so even if your dog's bit anybody before, they're
It
not
doesn't
covered.
matter what type of dog.
Yeah, even if it is outside of those specific breeds, if it has a bite history at all, it's not insured under your policy.
Yeah, so some companies will just say no 100%, and state to state things are a little bit different. I mean, and you never really know, too. My mom adopted a dog like maybe 6 months ago. It's from the pound, it's a mutt, but it just looks like a little tiny kind of like schnauzer, you know, little dog. So she did the kind of like the dog DNA test on it, and it's like 45% pit bull. So I'm like, if we saw this dog at your house, we wouldn't say anything. So, and in, you know, Baltimore area, your dog's probably going to be at least a significant amount pit bull. So we're not going to DNA test it, but visually it can be an issue. We had somebody we were at a house for, it was in Pennsylvania, not Maryland, but when the inspector went out to the house, the dog was like looking out the window, and
that was so funny.
That was unfortunate because it was a sweet baby Rottweiler, but he
just happened to peek out the window.
And so it kind of ruined it.
Midterm cancel. They have, this is another thing actually, they have a 45-day look period. So if they find anything wrong with the property, they do have the right to go back and say, we will not insure your home. You have until this date to find new coverage. Yeah. That was kind of
that was unfortunate.
An unfortunate situation, and that was kind of frustrating to work with the companies for. And then, the dog didn't even make it that much longer, actually. It was like an older dog, so it's like, literally, it was just all redundant, and it just was, I was like, great.
Are you guys happy now?
Yes, look what you did.
So those are kind of things they're going to look for. Also, to people, if you're looking to change companies, you know, I want a better rate, I'm going to move to, you know, whatever other carrier. They're going to look at my house, and if there's an issue, like say they're like, your roof needs to be replaced. They're going to say, if you don't replace your entire roof within a month or 2 months, we're going to cancel the policy because it's a brand new client.
For a new business type of situation. If you are a current client, you've been with us for 5 years, recently companies have been doing like midterm inspections. They go out and say, hey, this is wrong with your property. This is a hazard. Your roof needs to be repaired. It has severe, you know, just wear and tear damage because that's not covered. You need to repair your roof. They will give you until your next renewal date.
Yeah, that's for existing people.
Right.
So
new business, they have the 45-day look period. And can go back and say, hey, you now have a month to fix this issue or you will no longer be with us.
Yeah, so, you know, and a lot of that is for people, especially on existing policies, like if the company comes out and looks at the house again, they're looking at the same exact thing that when they write a new policy. But, you know, if your neighbor has that dead tree that then smashes their house in and they should have got it cut down, you're paying for that. We have a lot of people where they're like, well, my neighbor and their neighbor got their roof completely replaced. Like, if some guy knocks on your door and is like, hey, your neighbor got their roof replaced.
There was a storm at this date. Right. You could use this date. Like,
it's great for the client at the time, but, you know, definitely 2020, 2021, there's been more total roof replacements than I've ever seen.
Even in my neighborhood, I feel like.
It played a big factor because nobody could go out and inspect the property or see what was actually going on. So they were just like throwing out money for roofs just left and right.
There's no free money though. So all the people who got their roof replaced a few years ago, everyone else is in the state is paying for that. Just so, you know, there's no free money. You know, we're definitely there to replace what needs to be replaced, but it's not just like, well, every 30 years we're going to just pay to give you a new roof. Like, that's not really what we're there for.
Like I was saying earlier, there's still a, you know, responsibility on the homeowner side to maintain your property. So we're not just, like she said earlier, we're not like a warranty policy, we're insurance. We're here for the bigger losses that you are not, sudden and accidental losses is what I like to say is what is going to be insured under your policy. But that's a generalized statement. But
Right.
Yeah. So
Nice.
yeah.
Well, I really appreciate all of this information. Like, this is beyond what I was hoping for. So you guys have been wonderful.
Thank you.
Yeah, so we are going to have both of their information at the end of our video. We're also going to have them back. Yeah, I think we agreed on like once a month kind of thing to come in and just chat about insurance to give you guys a better idea of like what they deal with during the day and how they help you work your insurance angle when you're looking to buy a house. Give you some tips and tricks and all that good stuff. So I appreciate you girls coming in. Thank you so much.
Thank you for having us.
Yeah.
Appreciate it.
And have a wonderful day. Bye.
Bye.